Welcome to the Plan Solutions Incorporated podcast, where we give facts and insight on the latest happenings in the world of economics, financial markets, and personal finance. Plan Solutions provides advice on a variety of financial topics, including investment management, tax preparation and planning, and retirement planning. Chase has 25 years of experience in the financial industry, holds a certified financial planner and chartered financial analyst designations, and has earned a master's degree in taxation and a doctorate in business administration. Chase has a passion for helping clients down the path toward their financial goals. And I'm Jason LaChance, and on this episode, we're going to discuss inflation report, earnings seasons, as well. We'll look at Medicare open enrollment, and we'll venture on over to the Plan Solutions Incorporated office bulletin board. Mr. Armour, how are we today, good sir?
Doing well. No complaints. You know, Halloween just around the corner, so we'll see how many trick-or-treaters we get.
Yes, sir. Yes, sir. Always a fun time of the year. All right. Well, let's dive right into the inflation report. Despite the government shutdown, a special exemption was made for employees at the Bureau of Labor Statistics to complete the September Consumer Price Index report. What were some of those results? What are we seeing as far as inflation?
Yeah, I'll tell you, it gets tough when you do a podcast about, economic and financial data and the government shutdown, and half of the data that you might be be looking for something interesting and that could be a good topic goes away. But this is the one exception. Yeah, they kept the September Consumer Price Index report. They still published that because they needed it to figure out the cost of living adjustment for Social Security benefits next year, right? And so obviously that's important. It's going to impact a lot of people. So at least we're getting a little bit of insight into what's happened over the last month. It kind of came in pretty similar. The September inflation, it showed that prices increased 0.3% over the past month and 3% over the past year. So that's just a tick up from the 2.9% the previous month. But it is, the Federal Reserve has official target of 2% inflation. Historically, anything between 2 and 3% has been deemed acceptable. So, now at 3%, we're kind of pushing the top end of that range.
Mm-hmm. Mm-hmm. Yeah. Well, it's interesting because I wasn't aware, as long as we've been doing this, how the COLA, cost of living adjustments, plays into so many different factors. So, like you said, with seeing the reports that we did in September, kind of what are the first category to dive? What is the first category to dive into around inflation and what we're seeing?
Well, when the report came out, I'll tell you the first thing I went down the list and looked at commodities, less food and energy. Because that's everything from clothing to automobiles, right? And if we're going to see an inflationary impact from tariffs, that's where you would expect it to at least show up initially. But oddly enough, it was exactly the same as last month. The monthly inflation rate was up 0.4%, which is somewhat elevated. So that's now 2 months in a row where it was at 0.4. But over the last year, it was just 1.5%. So it's below average in terms of the overall year over year inflation, but above average in terms of the monthly. So, it's one of those where 2 months don't make a trend, right?
Right.
You could try and extrapolate, but the truth is you really don't know if you're sticking to the hard data. If it continues at, 0.4% every month, I mean, that would push it up closer to a 5% inflation rate. And given that category represents 20% of household spending, that will have an impact on the overall headline number. But on the other hand, a couple months that are elevated, I mean, we've seen that plenty of times in the past, and it didn't result in necessarily a higher year over year number. So we'll just have to continue to monitor. Hopefully, something will get worked out, and the October report will be available instead of having to wait longer to get more information on what's really going on with inflation.
Yeah. So when we look at certain categories like the commodities, less food and energy, I mean, is it safe to say too, some of it's cyclical, time of the year has an impact upon it as well, especially in the varying categories?
Um, well, the right answer to that is yes and no. And
Okay.
I mean, so the data is supposed to be seasonally adjusted,
Mm,
right? So there's statistical tools that are used to smooth it to take into account those different seasonal trends. Of course, as we know, I mean, seasonal trends can shift, right?
right.
Behaviors can, if normally people would maybe really start their holiday shopping on Black Monday, right? But now we know it's like, this time of year before the Halloween stuff is out, you're already seeing Christmas stuff starting to come in, right? That season's gotten earlier and earlier. And so as those changes occur, obviously that's not being picked up in those seasonal adjustments. So it shouldn't just be seasonal factors, but there can be some impact, right? If people are trying to front run tariffs, they may be running out, buying things, bidding up prices before some of the impact that's actually flows through, right? It's just
Right.
the change in behavior can create a change in some of those seasonal trends that would not necessarily be smoothed out by the normal seasonal adjustments.
Okay. Yeah. Thank you for the clarity. I was curious around that. All right. Well, let's jump over to shelter prices. Of course, shelter makes up more than 35% of the average household spending. What are we seeing as far as around shelter?
Yeah, so what's interesting there is we're kind of seeing the opposite of what we saw in commodities, less food and energy, and that the overall year over year, increase in shelter prices is above the average, right? So it's at 3.6% above the 3% headline number. And so, that number alone is 42% of the overall inflation rate
Mm,
because it's 3.6% is higher than average and because it's over 35% of household spending, right? So, that's a risk that it remains above 3%. Can inflation really fully normalize as long as that's the case? So we'll have to see if it continues to slowly trend down, which it has been, but very, very slowly. And partly that's because we're seeing the month over month numbers are coming in lower. So, shelter prices increased just 0.2% in each of the past 2 months. So if it were to continue on that 0.2% rate, we'd be looking at, shelter inflation coming down below 3%, more around 2.5%. But again, just like we said before, a couple months, it doesn't necessarily make a trend. So
right.
something we'll have to continue to keep an eye on.
Yeah, and when we keep an eye on this, what are the factors? Because when you think shelter, there's obviously those that are the renter versus the buyer. I'm assuming. Are there other factors that go into that? Something that I'm missing other than those two categories?
Well, it's really largely based on rents. So
Oh,
they
okay.
look at rental rates and then they have a category that they call owner equivalent rents.
Mm,
And in essence, the idea is if you own a home, how much rent are you giving up by choosing to live in it? So it's not necessarily a direct cost, but it's in what we call in economics an opportunity cost, right? Something that you're giving up in order to get a benefit. So that owner equivalent rent is a big portion. And as we've talked about in the past, the headline inflation rate, people's personal inflation rate can be quite different because if you own your home or if you have a fixed mortgage, your cost of shelter is not going up, and that's a big part of the inflation rate. Um, Even though they're factoring in those owner equivalent rents, it's not actually a direct cash cost to you. It's just a cost of what you maybe otherwise could earn if you chose to, rent out your house. And I don't know where you'd live in that situation, but or you'd have to rent, and then there'd be two people paying rent. So yeah, it's kind of a weird category in terms of how they track it, but it's a way to try and kind of look at it apples to apples.
Gotcha. And are there other factors that go into it that maybe aren't as obvious, like renters insurance or homeowners insurance, homeowners the taxes, etc., or is it pretty much just as you shared with us the equation of the cost of renting said property per se?
Yeah, it's really purely around that cost of shelter, right? The cost of having a roof over your head. There's other insurance categories, there's other utility categories, right? All those other things that you would have whether you owned or rented, but it's more driven or mostly driven by just that cost of keeping a roof over your head.
Okay. Yeah. Thank you for the clarification on that. Are we seeing any downward trends?
Well, what we've seen is with inflation, having come down quite a bit, and yes, it's ticked up some in the last few months, but we've seen a downward trend in interest rates, right? So interest rates are clearly pricing in this lower inflation environment. The 10-year Treasury bond, declined from about 4.6% at the beginning of the year to now below 4%. So that's a good sign. And in addition, we've seen mortgage rates follow to some extent. They started the year, a little over 7%, and now are down about 6.2% when you look at national averages. Now, 6.2% still feels high for those of us that remember when you could get a mortgage sub 3%, but at least it's moving in the right direction.
Yeah, definitely a positive for the potential of the housing market for sure. Anything else we want to jump in here concerning interest rates, inflation rates?
Well, I just think, the future path is going to be a little tricky. The When we wrote the newsletter, we said Polymarket predicts there's a 98% probability the Fed would cut interest rates by 1/4% in October. Well, that's now happened. So 98%, that's they're pretty on there. But they put in an 86% probability that they'll cut by the same amount in December. There's no Fed meeting in November. So,
Hmm.
we just had the October meeting. The next one would be December, the last one before the end of the year. But, I think with some of the comments that Fed Chair Powell made, that probability is probably going down. So, inflation is lower. It's allowed the Fed to resume cutting interest rates, but it's ticked up maybe just enough that they're going to be a little bit more cautious going forward. So I think it's becoming more of a 50-50 proposition at this point as to whether we'll see another rate cut in December.
Okay. Yeah, thank you for that. Just a refresher, real quick for the listener, we've talked about poly market before, but could you drop in what poly market is?
Yeah, Polymarket's a prediction market where people can go and put real money in based on their expectations of certain events occurring. And really for a lot of people, it's replaced the survey data. The survey data has largely become very unreliable in the past 10 years or so, whereas these prediction markets have been extremely accurate. So it's always an interesting place to go and see where those percentages are when you're kind of shaping your expectations.
Yeah, yeah. Thank you for that reminder. All right, let's jump to earnings season. The U.S. stock market finished the third quarter strongly. And why was that? What were we seeing in the third quarter, maybe compared to the second quarter and the rest of the year?
Yeah, so I mean, we're now, completely through the second quarter earnings season. I think earnings were a big driver. Year-over-year earnings growth was 11% in terms of reported earnings. Operating earnings, which kind of takes out some of the one-time charges or one-time income things, was up 9.7% year over year. So, that's good news. We're continuing to see strong earnings growth. And now, we've moved into the third quarter earnings season, and typically it's the big national banks are the first major companies to report earnings. They just really kind of kick off the earnings season. And this quarter, they came out really strong. Good financial market trends boosted revenue and profits. Lower credit risk means they didn't have to set as much aside in loss reserves, which are a subtraction against earnings. So we're seeing some real positive trends on the earnings front.
Yeah, what followed after the big banks as far as most companies and their results as far as what we're seeing so far?
Yeah, I mean, it is a bit of a hodgepodge. There's not necessarily a rhyme or reason to which companies report when, but you do
Hmm.
have these little periods where, the big banks, financials is the second largest industry in the market. So obviously that, has an impact and they report first. And now we're just starting to see the real flood of tech earnings. And of course, technology stocks being the largest segment of the market, that's something that we really focus on. But, I mean, following the big banks, we had a number of kind of different companies in different industries reporting strong results. As of when we put this together, 85 companies had reported, 73 beat the expectations while only 10 missed, and two came out in line with where expectations were. And given those strong results, the current estimate for the third quarter is that earnings will increase 4.2% for the quarter and 18.1% from the prior year. So, if this trend holds, we could be seeing actually not a deceleration, but an acceleration in the earnings growth rate, even from what was a really good second quarter.
Yeah, yeah. Well, that's a good sign that the strong earnings performances. I mean, it's been a huge big part of the U.S. stock market recently. We've talked about the new record highs and so on and so forth. So, what's kind of the potential forward looking here? What areas do we really kind of got to watch, or any insight or potential speculation around there?
Well, I think what it tells us is, with the market hitting, new record highs, that, it's justified by the data.
Hmm.
As Charlie Munger said, in the short term, the market is a voting machine. In the long run, it's a weighing machine. And, what he meant by that was in the short term, it can move around just based on people's opinions or expectations. But in the long run, it tends to reflect the real fundamentals, things like earnings growth. And so I think we're in one of those periods now where to an extent, the market, strong market performance is reflecting the strong earnings. And, strong earnings is a sign that the economy and financial systems probably holding up pretty well right now.
That is a good sign for sure. And do we still have any sectors that still need to report around their earnings and that might shed a little more insight too?
Oh yeah, yeah. There's quite a few. I mean, as we talked about, the technology stocks will be the big one. We've already had a few. It's been kind of mixed, but still a lot more to come.
Now, is the majority of that around technology? Obviously, a lot of investment in AI and pushing that forward. Is that primary one of the key primary areas, or is there other maybe areas of tech that in past episodes of the podcast we haven't touched on as much because AI has been the hot button?
Well, and that's where it's a little tricky, right? Because for some of the tech companies that are investing heavily in AI and building out data centers and things like that, I mean, actually at this point, AI is a cost against their earnings, right? Because
Mm,
they're dumping a lot of money into it and not necessarily getting the revenue coming back out. Now, on the other hand, if you're one of the beneficiaries, like, you're making the chips that are needed to do all these AI computations and things, you're probably reporting very strong earnings, and we've seen some of that because there's just this increased level of demand for what you sell, and so growth rates and profit margins are really high. So I think it's kind of a mix within tech as to where in the in the kind of industry hierarchy different companies are positioned.
okay, awesome. All right, let's jump to Medicare open enrollment. Open enrollment is from October 15th to December 7th. What's some of the in and outs that we need to let individuals and families know when it comes to reviewing and making their Medicare health and drug plan changes?
Yeah, so if you're over 65, you're probably just being inundated with Medicare open enrollment advertisements, right? All the different insurance companies trying to get people to, re-up or change their coverage or at least explore other options. But, if people are looking to do that, it's important. Now's the time, right? Now's the time when you can do it without any, qualifying event, right? Meaning, you don't have to have had something change in your life. You can make those changes at this point. And the reasons for making a change, it can vary by individual. It might be changes in health status that makes a different plan preferable. Change in preferred healthcare providers, right? Maybe you decide you want to switch healthcare providers, and the one that you want to move to is not covered under your existing insurance, but would be under a different plan. Maybe you need to change the coverage for new drugs or prescriptions that people are taking because different plans do have different prescriptions that are covered, or maybe it's just cost, right? You want to be able to weigh some different options and possibly reduce the cost. So there's a number of reasons to consider exploring the options around open enrollment. But at the same time, if someone's happy with their current plan, they don't really need to do anything. It'll just remain the same. It'll roll over, and then they'll just have to wait till next year. It'll become effective January 1st, but then they'll have to wait till next year to decide if they want to make a change.
Yeah, absolutely. I think that was pretty good and thorough. Not sure there's anything else you want to add before we jump to the bulletin board.
Well, just that, as I kind of alluded to, open enrollment, that's when people can make changes for any reason, but, others have, like special enrollment periods, right? Like if you've been covered by an employer plan, you're over age 65, but now you're leaving your employer, you don't have to wait till open enrollment to enroll. That's
Mm.
a, special qualifying event. Sometimes change in life situation, things like that can sometimes allow you to make a change even though it's not during the open enrollment period. For some people, they keep that in mind because, there may be other options during the year to make those changes. And especially if you're working, plan on retiring in the spring, you don't need to worry about open enrollment.
Okay. Yeah. Thank you for that clarification on that. All right. We got two items pinned up there on the Plan Solutions Incorporated office bulletin board. What's the first item?
Yeah, mostly just around continuing education. Daryl and I, we attended the Financial Planning Association of Northern California Winter Symposium. They've gone to a quarterly, which I actually like. They used to have shorter monthly meetings in the morning. Always seemed like you're spending a lot of travel time getting to and from. Now they went to longer quarterly meetings where you can just pack in more information. And this was a good one. It consisted on presentation around the costs of aging and how to prepare clients for those costs. So that was, well, really insightful. Obviously, just an ongoing issue as the population ages. There was a panel discussion on the benefits of working with a private fiduciary,
Hmm.
right? So, maybe you don't have a friend or family member that can manage your financial affairs or even your health care if you're not able to do it yourself. Well, there are people that do that for a living. They're licensed, they're bonded. So that can be a good option. And it's just always a great opportunity to see good speakers, good information, continue to learn as well as network with other people within the industry within our region.
Yes, sir. All right. What's the second item you got pinned up there? I'm seeing Matt traveled across the country.
Yeah, so Matt went to Philadelphia to attend an in-person program, getting prepared for the Certified Financial Planner exam coming up. Carter did a similar one, but in Southern California. Unfortunately, there weren't any of these real kind of immersive, updates or prep courses local, but they're both really gearing up for the exam in November. So, they've been cramming hard and hopefully they do well.
Yeah, absolutely. Two awesome gentlemen. It's great to make their acquaintance at the golf tournament this year. All right, Mr. Armour, anything else you want to add before we wrap up this edition of the Plan Solutions Incorporated podcast?
Well, just hope everyone has a happy, safe Halloween, and don't forget to change your clocks. Unfortunately, it's gonna be getting dark a lot earlier, unless you live in Arizona. The lucky people in Arizona. But
Yes, sir. Absolutely. Well, we thank you for listening to the podcast. If it's your first time, hit that subscribe button, Apple Podcast, Spotify, or whatever platform you're on. And if you want to find out more about Plan Solutions, of course, the information is in the description. Just go to plansolutions.com. As well, if you prefer a video form, we have a video form of the podcast on our YouTube page, youtube.com/@plansolutions, where you'll follow along to the personal financial review, the written content we discuss here, as well as listen to the podcast. And if you are like me and prefer to do some reading, hey, get subscribed to the Personal Financial Review by sending Katie an email, katie@plansolutions.com, and get subscribed today.
The views and opinions expressed in this podcast should not be construed as an offer to buy or sell any securities. The information may not be current, and Plan Solutions has no obligation to provide an updates or changes. Plan Solutions does not make any representation or warranty as to the accuracy or completeness of the statements or any information contained in this podcast or any liability therefore, including in respect of direct, indirect, or consequential loss or damage, is expressly disclaimed. Plan Solutions is not providing any financial, economic, legal, accounting, or tax advice in this podcast. In addition, the receipt of this podcast by any listener is not to be taken as constituting the giving of investment advice by any Plan Solutions associate or individual to that listener, nor to constitute such person a client of Plan Solutions. Any reference to a specific company or security does not constitute a recommendation to buy, sell, hold, or directly invest in the company or its securities. Market indexes are unmanaged and cannot be invested in directly. All price references and market forecasts correspond to the date of this podcast.
Plan Solutions is a registered investment advisory firm.